BlackRock doubles down on Bitcoin. In a groundbreaking move, BlackRock, the world's largest asset manager, has doubled down its bet on Bitcoin, signaling a significant shift in institutional investment sentiment towards the leading cryptocurrency. This move underscores a growing acceptance of Bitcoin as a legitimate asset class among traditional financial institutions. Number 5. Strategic shift. Embracing cryptocurrency. BlackRock's decision to double down on Bitcoin underscores a significant strategic shift within the asset management industry. Historically, the company had approached cryptocurrency investments with caution, citing concerns surrounding regulatory uncertainties and the inherent volatility of the market. These reservations were reflective of broader sentiments within traditional financial institutions, which viewed cryptocurrencies as speculative assets lacking fundamental value. However, recent developments in the cryptocurrency market have prompted BlackRock to reassess its stance. The exponential growth of Bitcoin's market capitalization, coupled with its increasing acceptance as a legitimate asset class, has captured the attention of institutional investors worldwide. Moreover, the growing demand from BlackRock's clients for exposure to digital assets has further accelerated this shift in investment approach. One of the key drivers behind BlackRock's decision is the evolving perception of Bitcoin as a store of value and hedge against inflation. As central banks continue to pursue expansionary monetary policies and concerns over currency debasement rise, investors are increasingly seeking alternative assets to preserve the value of their wealth. Bitcoin's limited supply and decentralized nature make it an attractive option for investors looking to diversify their portfolios and hedge against macroeconomic risks. Additionally, the emergence of institutional-grade infrastructure and custodial solutions has addressed some of the concerns regarding security and regulatory compliance in the cryptocurrency market. This maturation of the ecosystem has instilled greater confidence among institutional investors like BlackRock, paving the way for increased participation in digital asset markets. BlackRock's decision to double down on Bitcoin also reflects a broader trend of institutional adoption within the asset management industry. As traditional barriers to entry are dismantled and regulatory clarity improves, more institutional players are entering the cryptocurrency space, driving greater liquidity and market stability. Number 4. Growing institutional interest. BlackRock's decision to increase its exposure to Bitcoin is emblematic of a broader trend sweeping through the institutional investment landscape, a growing interest in cryptocurrency as a viable asset class. This trend extends beyond BlackRock and encompasses a diverse array of institutional players, ranging from investment banks to hedge funds, who are increasingly allocating capital to digital assets. One of the primary motivations driving this institutional interest is the recognition of cryptocurrency's potential as a hedge against inflation and a store of value during turbulent economic periods. Traditional asset classes like stocks and bonds are subject to the whims of central bank policies and macroeconomic factors, which can erode their purchasing power over time. In contrast, cryptocurrencies like Bitcoin are designed with scarcity in mind, with a fixed supply that cannot be manipulated by central authorities. This inherent scarcity makes them an attractive option for investors seeking to preserve the value of their wealth in the face of inflationary pressures. Moreover, the decentralized nature of cryptocurrencies appeals to institutional investors who are looking to diversify their portfolios and reduce their reliance on traditional financial intermediaries. By investing in digital assets, institutions can gain exposure to a new asset class that operates outside the traditional financial system, potentially offering greater resilience to systemic risks. Furthermore, the maturation of the cryptocurrency market infrastructure has played a crucial role in facilitating institutional investment. The emergence of regulated cryptocurrency exchanges, institutional-grade custody solutions, and derivatives markets has addressed many of the concerns surrounding liquidity, security, and regulatory compliance that previously deterred institutional participation. As a result, institutions like BlackRock are increasingly comfortable entering the cryptocurrency market, viewing it as a legitimate and promising investment opportunity. While risks remain, including regulatory uncertainty and price volatility, the growing institutional interest in cryptocurrency signifies a significant shift in investor sentiment and underscores the increasing mainstream acceptance of digital assets as an integral component of diversified investment portfolios. Number 3. Bitcoin's maturation as an asset class. Bitcoin's journey from obscurity to mainstream recognition as a legitimate investment vehicle has been marked by its maturation as an asset class. This maturation process has been driven by several factors, including its steadily increasing market capitalization, which recently exceeded $1 trillion. This milestone underscores Bitcoin's significance within the broader financial landscape and has contributed to its acceptance as a viable investment option by institutional investors. The exponential growth in Bitcoin's market capitalization reflects not only its increasing adoption, but also its resilience in the face of market volatility and regulatory challenges. Despite facing skepticism and criticism from traditional financial institutions and regulatory authorities in its early years, Bitcoin has demonstrated staying power, gaining traction as a digital store of value and a hedge against inflation. Moreover, the entry of established financial players into the cryptocurrency market has provided additional validation of Bitcoin's role in diversified investment portfolios. Institutions ranging from investment banks to asset managers have recognized the potential of Bitcoin to enhance portfolio returns and mitigate risk, particularly in the current economic environment characterized by unprecedented monetary stimulus and market uncertainty. The involvement of these institutional players brings with it a level of credibility and legitimacy that further enhances Bitcoin's status as an investable asset. As institutions allocate capital to Bitcoin and other digital assets, they contribute to the growing liquidity and stability of the cryptocurrency market, making it more attractive to a broader range of investors. Number 2. Risk management strategies. Despite the growing enthusiasm for Bitcoin among institutional investors like BlackRock, prudent risk management remains a top priority. While Bitcoin has demonstrated remarkable resilience and potential as an investment, its inherent volatility and regulatory uncertainties necessitate a cautious approach to portfolio allocation. One of the key risk management strategies employed by institutional investors is setting strict allocation limits for Bitcoin and other digital assets. By establishing predetermined thresholds for exposure to cryptocurrencies within their portfolios, institutions can mitigate the impact of extreme price fluctuations and limit potential losses in the event of adverse market conditions. These allocation limits are often informed by factors such as risk tolerance, investment objectives, and regulatory considerations. In addition to imposing allocation limits, institutional investors like BlackRock are diversifying their exposure across multiple digital assets. While Bitcoin may dominate the cryptocurrency market in terms of market capitalization and liquidity, there is a growing ecosystem of alternative digital assets, each with its unique value proposition and risk profile. By diversifying their holdings, institutions can spread risk more effectively and capture opportunities for growth across different segments of the cryptocurrency market. Furthermore, institutional investors are closely monitoring regulatory developments to stay abreast of changes that may impact their cryptocurrency investments. The regulatory landscape surrounding cryptocurrencies is evolving rapidly, with authorities worldwide grappling with issues such as investor protection, market integrity, and financial stability. Changes in regulations can have profound implications for the legality, liquidity, and valuation of digital assets, making regulatory compliance a critical aspect of institutional risk management strategies. Number 1. Impact on market dynamics. BlackRock's decision to increase its investment in Bitcoin is poised to have far-reaching implications for the dynamics of the cryptocurrency market. As the world's largest asset manager, BlackRock's entry into the Bitcoin space signals a significant vote of confidence in the digital currency and could catalyze further adoption among institutional investors. One of the immediate effects of BlackRock's increased investment is expected to be a boost in Bitcoin's price appreciation. The sheer size and influence of BlackRock mean that its investment decisions carry considerable weight in financial markets. As BlackRock allocates more capital to Bitcoin, it could create upward pressure on prices, driving demand and fueling a bullish trend in the cryptocurrency market. Moreover, BlackRock's involvement is likely to contribute to greater stability in the cryptocurrency market. Institutional investors typically bring a longer-term perspective to their investments and tend to have deeper pockets compared to retail traders. Their participation can help dampen volatility by smoothing out fluctuations in demand and supply. This increased stability could attract more investors, including retail traders and smaller institutional players, further reinforcing positive price dynamics. Furthermore, BlackRock's foray into Bitcoin could serve as a catalyst for other institutional investors to follow suit. Institutional herd behavior is a well-documented phenomenon in financial markets, where the actions of one large player can prompt others to replicate similar strategies. The endorsement of Bitcoin by BlackRock, a renowned institutional heavyweight, may encourage other asset managers, pension funds, and endowments to explore cryptocurrency investments, leading to a broader institutionalization of Bitcoin and other digital assets. As more institutional players enter the cryptocurrency market, it could trigger a virtuous cycle of increased liquidity, market depth, and mainstream acceptance. This, in turn, may attract even more institutional investors, creating a self-reinforcing cycle of growth and maturation in the cryptocurrency ecosystem. Do you think you'd enjoy it? Click the like button and subscribe to our channels for more videos that are not only entertaining but also educational.